Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Now we can see that the trend of Nifty is up in the daily and even in the weekly time frame charts. But there is one difference which we can clearly see in the daily time frame chart, that the trend is up, but we have a higher high in price. If I convert this chart into a line chart, and we certainly do have a lower high in RSI. So this is a negative divergence, and this negative divergence got completed on this day, 2nd Jan. And then we had a small sell-off on 3rd of Jan. But immediately after 3rd of Jan, then we saw a pullback of a couple of days. This is a short-term pullback. If you just have a look in the hourly time frame charts also, we can see that there was a sudden gap up, and after the gap up, prices rallied, again came back. Even this particular sell-off was again met by a follow-through buying and again a hammer. So what is happening is basically the trend is up, the momentum is slowing down. The velocity with which we saw the prices move higher initially in this zone, especially in this zone, the velocity was very high. You can check this weekly time frame chart. But now you can see the prices are continuing to move higher, but the velocity, the speed, the momentum is much slower. So this is obviously a can say a bullish trend, but traders are not going to have a very easy time making money. All right. Also, what we need to understand that over here, trend and momentum both are diverging from itself, as we can also see that the prices are way overstretched in the weekly time frame charts. RSI is also around 75, 76 levels. Prices are also away from the moving averages. So this is not a very good time to initiate too many trades at one point of time. Like if you're holding some previous trades, then obviously you will need to do some trade management. You will be holding these trades with your trailing stop losses. So already if you're holding too many trades from lower levels, maybe it doesn't make much sense to initiate too many new trades. But if you're not holding a lot of trades, then maybe yes, at a time 1 or 2 trades you can initiate. And again, as soon as the targets are hit in those stocks, then you can possibly jump up to the third one. So going slow and steady as of now is the motto, and saving your capital is the motto. Whatever money you have been able to make over here, you should not be giving it back to the market in this consolidation. Now, having a look at Bank Nifty, again, we can see that the trend is up. Prices are overstretched, and in fact, it is clearly visible that we do have a higher high in price in Bank Nifty and a lower high in RSI. So this is a sign again of wanning momentum, that the trend remains on the upside. The trend is on the upside, but the momentum with which, the speed with which prices was traveling higher early, now it will not be the same case. Now prices will consolidate. It will take time to go higher. So traders will have a hard time. So you'll have to be a little bit careful. Like if you're trading in the banking pack, you have to be pretty sure exactly which stock you're going to pinpoint. Like say, for example, in banking, there are PSU and private banks. So is it that you can pick up just any PSU breakout or any private banking breakout and trade? No, it's not that case. You have to be very precise about that. Okay. PSU banking pack, I guess it looks bullish, and possibly the momentum will continue to move higher. Private banking pack looks a lot like the Bank Nifty. If you just have a look at the Bank Nifty chart right now, and if you have a look at the private banking pack, it's clearly visible that the private banking pack took a support over here at 23.6% Fibonacci retracement, which is at 24,419, and then the price started bouncing. But if you check properly, then this is also a sign of wanning momentum or not wanning momentum, because at times when prices are very close to each other, it's not visible with the naked eye. If I just convert it back to the candlestick chart, you might assume, okay, that we do have some sort of uptrend going up over here and negative divergence in RSI. But when you cross check it properly with a confirmation from the line chart, you will very much understand that this is not a negative divergence, because this was the highest high, then we had a lower high, and then we had even a lower high. So this is basically nothing but just a consolidation. What we have is possibly you can say some sort of triangle formation or something over here. So if there is a breakout, prices will continue to move higher. But again, you have to be very precise which particular stocks you are looking up to. Like one of the stocks which I like right now is Axis Bank. Obviously, the breakout took place in the shorter term hourly time frame chart somewhere over here, but it's probable that the momentum may continue on the upside in the next few days and weeks. Energy pack, well, continues to remain overstretched. Trend is up. Weekly RSI is at 85, 86. And I would not like to initiate any new trades in this particular stock as of now. Okay. Reliance Industries is showing signs now of wanning momentum because it has made a higher high over here, lower high in RSI. Even it is visible that we are at a resistance in Fibonacci and even a price high. So probably makes sense to book partial profits if you're holding the stock from lower levels and trail your stop losses pretty tightly. Metal pack, I can say that the trend is up, obviously, but if you check that the prices are trying to just reject higher levels, and why this is happening, one of the reason is prices are making a higher high. You can see over here again, if you want, I would just like to highlight it for you. Higher high in price, lower high in RSI. Although this negative divergence is not very strong, but we cannot neglect it. And if there is some sort of price correction in metal pack, then possibly we should start looking back at these stocks with a view of a swing trader. Auto pack, I guess they have seen a very handsome rally for a swing trader recently. Now once again, they are in the zone where they would like to consolidate, and if they correct, then only I would like to step in back into this particular sector. Finance pack, it seems that it is more or less consolidating. Trend remains up, and the momentum might continue on the upside. But I would be more happier that if the prices correct and consolidate a little bit more, because this particular run up which has happened recently in the month of, you can say, ending of November and mid of December, this rally was way too fast, and after that just a little bit of consolidation is not enough. We need more consolidation. But yes, any stock which is visible at lower levels at discounted prices, and if you have any sort of breakout in that stock in the lower time frame charts, you can look up to it as a swing trade. Consumption pack, I would say that there is a negative divergence as of now. You can see higher high in price, lower high in RSI, but as of now doesn't look like a very strong negative divergence. If this particular higher level, this highest high of the recent Friday is taken off with a big green candle, then prices will continue to move higher. FMCG pack continues to move higher. Now, I guess it's visible that RSI is at 80.72. And if you have a look at these particular stocks like ITC for a swing trade, new swing trade, I guess it's not a good time. We need to wait, and maybe if the stock corrects and if it is available at a cheaper price, and then when you time it from a lower time frame breakout, it will be better. And in fact, even Hindustan Unilever, which I had shared with all of you, had recently rallied pretty nicely. Again, it's trying to consolidate. So yes, you can surely keep your eyes on this stock. You can see that the candles which have been made in the daily time frame charts are not that good, but that is completely all right, because as a trader, you just cannot decide on any stock that if it's making a hammer, it's a good stock. If it's making a shooting star, it's a bad stock. What we need to understand is that the trend is up. It's trying to consolidate. Once the consolidation is over, does the shorter term time frame chart look nice or not? Because ultimately you're going to take your trade from the smaller time frame charts. All right. So you can keep a watch on the stock, but I would not like to jump into it as of now. Infra pack, you can say that the prices are continuing to move on the upside. I would not like to initiate any new trades in this particular sector. Yes, if you're holding from lower levels, you can surely continue to hold them with your trailing stop loss, but I would like to wait. And if the stocks of these particular sector, if they're available at a lower prices, I would be more comfortable to initiate trades, but otherwise I would wait. IT pack. Now, this is one sector which I would like to concentrate on, because after this nice, decent positional rally, stocks are correcting. As of now, there are 2 to 3 stocks, according to me, which are looking nice. You can have a look at TCS, especially in the smaller time frame charts. There are some obvious reasons due to which it's looking nice. Okay, you can see the way RSI has gone to 20 and then it has started to bounce. So generally, the more oversold the stock is, the more sharper the bounce back will be. That is obviously one of the reasons. Second stock, according to me, is BOFT. You can see the stock bottomed out with a positive divergence in RSI and between the price. So again, we have a nice base formation over here. So swing traders can have a look at this particular stock. And one more stock would be the king of the IT pack, which is INFOSIS. Okay. Again, if you check INFOSIS, if I just give me a second. Okay. So if I just plot this particular Fibonacci extension, you can see the price did decide to bisect this particular support, but immediately on the next day, it bounced back with a big doji. Okay, this is a long-legged doji, and long-legged dojis are very rarely visible in the market. And then we have volatility contracting and sudden up move. So these are the 3 stocks which you can keep a watch on, but mind that you should be timing these stocks only if you have a shorter term breakout in the short term charts. Pharma pack, I guess it's looking a little bit overbought in the daily time frame chart, but there is one stock which positional traders can keep their watch on, and you can see it's trying to form a sort of ascending triangle. It's making higher highs on the lower side, and on the upside I have tried to join these 2 points with a trend line. So any sort of breakout above this recent high with a big green candle will result into a positional breakout. One more stock is Dr. Reddy's Labs. Now this stock is trading near a support zone. You can see this previous high is trying to provide support to this stock. So this is not a stock for any swing trader or something, but if you're a short-term momentum trader, then maybe you can keep your eyes on to the stock. PSC sector, I would, again, as I'm saying, I would not like to initiate any new trades in these stocks. I'd like to stay away. Holding from lower levels is completely fine. You can continue to hold them with your trailing stop loss. And if the stop loss gets hit, you can exit. You can see the weekly RSI is at 89. When was it that the weekly RSI was at 89 levels? You can see that it was way back in 2000, and obviously near to that, not exactly over there, but it was in 2014. All right, so possibly 9 years back. So this is an extremely overstretched market in the PSC sector. Real estate stocks, again, on this day there was a big red candle, not a very big red, but decent sized candle, and it was probable that if the stocks corrected, if the sectors came down, then we could fancy our chances as a swing trader. But unfortunately, immediately after the this big green candle or the medium sized red candle, immediately there was a buying, and then the sector started going up, the stock started going up. If you look the stock DLF, it took off like a rocket immediately. So at times, when the trend is very strong, it does happen that the trend overpowers momentum and it doesn't obey to the signs on the chart that we do have a higher high in price, lower high in RSI. And when the trend is strong, all these divergences will be taken for a toss and the trend will continue on the upside. So you'll have to wait. If you do not have a position in these stocks, you'll have to wait patiently for the stocks, for the sector to correct. Only then you can re-enter. And last is the Midcap Index. I don't think so I need to repeat myself, but looks extremely overstretched. The party is still continuing even at higher levels, even at a reading where you can see a very clear higher high in price, lower high in RSI. Although this negative divergence is not very strong, but yes, it's still visible to us. We cannot ignore it. So would not like to initiate too many trades, but if I'm holding from lower levels, I would continue to hold them with a trailing stop loss. And summing it up all, I guess it's pretty much visible even on the Nifty charts, on the daily time frame charts, that the momentum is waning and some sort of profit booking consolidation is probable, but the trend is so strong that it's not ready to come down. And as a trader, it's not a good time to initiate too many trades. Maybe one or two trade at a time, and then once that particular trade at least ends in partial profits, then you can initiate the next trade. Because if you initiate too many trades as of now, and suddenly if the market cracks, you will see a lot of stop losses getting triggered across the board in your new initiated trades. All right. So try to save your capital, trade less, and pick your stocks very, very wisely. Take care, guys.